I've got an important COVID-19 update, and later we'll talk about the Bank of Nova Scotia, bns.to, and whether it's a buy coming up. Welcome back to the channel, guys, for what I'm hoping might be the last COVID-themed video on this channel. It's been a pretty good series trying to put weekly updates out about this, but it seems like there is some interest about investing in general, so I'll continue to do that stuff. However, we have some good news this week in that there is a plan in our province of Alberta to start going back to normal. So my good news update, COVID related, is only that this week. I'll leave a link to the article I'm about to describe below, but we do have some good news. We do have a plan to go back now. This week, our Premier announced a phased approach to going back to normal. I know that there are some spots in the States. I know Texas has now reopened businesses and things are starting to return. Whether it's too soon or not, it's still kind of early to tell. However, here in our province, we have started with the opening of some of the golf courses, some of the parking lots for provincial parks. Certain surgeries and other procedures that were postponed are now starting to move forward. Dental offices and other practitioners such as respiratory therapists or audiologists are now returning to work as of the end of this week. And starting May 14th, people will also be able to make reservations for campgrounds. Now, May 14th will actually be the first date of stage 1 of this return to work. So I'll put up on the screen what that includes. So I just described the early actions. Stage 1 is in the middle column here. So restaurants, cafes, lounges, and bars can start operating at 50% capacity. Retail businesses such as clothing and furniture and bookstores will be allowed to open. And physiotherapy, chiropractic services, daycare, summer camps, all will be able to come back in some limited capacity. I'll leave a link to this graphic in my description. The province didn't say how long stage 1 will last. They're gonna kind of take it week by week, it sounds like. They will later move on to stage 2. And the biggest thing there would be that kids from K to 12 will return to school. There will be more scheduled surgeries, including the backlog elimination created from the delay. Services such as manicures, pedicures, waxing, facial treatment, those services will reopen. Some of the larger gatherings will still be allowed. Up until now, we would only be allowed gatherings up to 15. Movie theaters and other theaters with restrictions would reopen. And finally, stage 3, which would assume that stage 1 and 2 go well. Stage 3 would involve the full reopening of all businesses with limited restrictions and then more larger gatherings. So that is great news. It's a sign that we're returning to normal. We're still averaging around 200 new cases a day here in the province. However, the province seems to be confident they can cope with the added stress on the healthcare system here. So again, if things don't go well, we would have to go back a step or return to our quarantine measures. However, this is a hopeful sign. Now, you'd think with all the good news this week, we would be seeing an uptick in the markets. However, it kind of surged in the middle of the week and fell back down at the end of the week. The S&P 500 is down 1.26% to 2,830 points. And analysts are saying this is mostly due to the poking of the bear that Trump continues to do with China. Trump is accusing China with no evidence presented yet that they were kind of responsible for not handling the virus very well. We'll leave it at that. It's okay. It actually kind of feels like we're back to normal because that was almost the news before all of this started happening. So that's enough for the news updates for today. I did want to talk about one stock today. So a few weeks ago, I did a video about Canadian banks. I'll leave a link right here. It was about getting my first dividend stock and what I would buy if I were to pick a financial institution in Canada. Geeta left a comment on that video asking about Bank of Nova Scotia, and she's right. That is actually a bank that's available across the country that would be comparable to what I was comparing the rest of these banks to. So I'm gonna update the stats and go through this particular stock on its own, and we'll see how it compares to the rest of the banks that I had analyzed before. For that, I'm going to read all of these statistics for you guys. I'll put these slides up on the screen. So the stock price as of May 2nd is $54.25. The dividend on this stock is $3.60, which gives you a yield of 6.64. The price to earnings ratio is 8.19. Remember, we said anything under 20 or 15 is probably good around this point. The PEG is 1.38. Price to sales ratio 1.53, price to book is 0.88, and debt to equity ratio is 31%, which is low, which is good. So far so good on this. Now, the free cash flow per share is a problem. It's actually a negative number, and I'll get into that a little bit more later. The DGR streak is 9. Right now, let's just compare this to the other banks that were on the list in that previous video. So here are the other 5 banks with BNS on the very far right. I've highlighted in green anything that kind of looks good, and red is a bit of a red flag. So last time I had talked about thinking about going between CIBC and Canadian Western Bank. Canadian Western Bank is CWB. CIBC is right there next to RBC. Most of these banks are fine. Looking at the Bank of Nova Scotia's stats, the yield is actually fairly high, but we all know that that's not everything. The price to earnings ratio, a little bit higher, but I would say it's kind of in the high middle area. Same thing with the PEG. Their price to sales ratio is about average, right in the middle. Price to book ratio, still very healthy, nothing wrong there. And the debt to equity ratio is also not bad. Right now, if they had to pay all their liabilities, they would be able to sell their assets to do so. So far, so good. Now I'll jump down to the DGR streak, which was how many years in a row they have raised their dividend, and it's 9 years, just like every other bank except for the CWB. So again, nothing too concerning here, but this free cash flow per share was a concern. I actually didn't believe this number. So I did a bit of digging into the cash flow statement for Bank of Nova Scotia. I'm kind of using the numbers here from October 31st last year, but I think this is kind of where the issue is coming from. And that there are negative cash flows from their operations activities. They have positive cash flows from their investment activities. They almost kind of break even. However, when you go down to the free cash flow section, which is where that stat is pulled from, the free cash flow is actually negative. So what I said in the previous video is free cash flow is how companies, banks, same thing, would probably pay their dividends. If I'm understanding this correctly, a negative number here means that if Bank of Nova Scotia wants to pay their dividends, they would have to borrow money. So I'm not saying that they won't pay their dividends, but it's not a good place you'd want to be, especially if you go back and compare this bank and these numbers with its peers. We were a little bit concerned with TD, the fact that it could only pay out, according to its financial statement, $1.48 per share, but their dividend is $3.16 per share. Well, right now it looks like Bank of Nova Scotia is kind of in some hot water, and they would have to borrow money to pay their dividend of $3.60. Now, again, I am just a casual investor. I'm just like you guys, trying to figure out and compare to see where I should put my money and where it would be best placed. I still think any of the other 4 banks that have the positive or higher cash flows would be a safer bet. But that's just me and what I've been able to research. One last thing I was going to say about these bank stocks is there were some really good comments talking or asking about how these banks have lent out to people who may not be able to afford mortgages now since they've lost their jobs. Doing that extra research is actually really good to put that thought into it. This was just a high-level comparison using rules of thumb to compare different banks. There definitely will be some repercussions to the banks, especially if people start to default on their mortgage payments and that kind of thing. I know that these banks did let people defer mortgage payments, probably not interest-free. Actually, I know they're not interest-free deferrals. However, I do think the banks will work something out with those customers. And with shops now opening up at some capacity, a lot of these people do stand to get rehired back into their old jobs. I know a lot of instances where people were laid off because that company felt it would be the best thing to do for those workers and let them apply for financial aid from the government sooner rather than later. A lot of these companies, I do think, will try to hire some of their employees back. So this effect will be something that households need to manage. However, I don't think it's a huge detriment to some of the banks that might be more exposed to people's mortgages than some of the others. And even if others are more invested in businesses were affected just the same as households were affected. So I still think the advantages are here with any of these stocks. You're getting into a dividend paying, fairly stable and secure type of company. Like I said in the previous video, financial institutions in Canada are some of the most responsible and have been around for a long, long time. So I don't think that any of these banks will be going anywhere, but I think some of them are in better shape to pay their dividends than others. So I'll conclude the Investing During a Crisis series of videos and make this a playlist so that you guys can refer to it later. Until next week, have a great week, continue to stay safe, and I'll see you in the next one. Bye. However, I know the banks have let people defer mortgage payments. They didn't give them a I know these banks did let people defer mortgage payments, and my free cash flow is usually how banks, or video is free cash flow is where